Okay, let's start. Can you all hear me? And can you see the chart like always? Okay, that's perfect. So let's just start before we go and do anything else. Let's talk about yesterday's live trade and the follow-up on the USD CHF. I make it quick and painless. Let's check, let's start from the daily chart. We had a bounce on the 633 and the 200 on the daily chart. The price moved down over almost 400 pips. And of course, when we see something like this, we expect a bigger retracement at some point. But as long as we have red candles, we can go to the lower time frames. And according to the rules, always look for new entries, correct? So if we check the 4-hourly chart, what we had after our first entry up here, a second, a third, another one, and another one. And yesterday, when we started the live session, we saw that retracement back to the 36. So the price touched the 36 by the pip almost. And because the pressure is there to the downside, we always expect again a bounce in this area. And we never know if the price will move lower or if it will start to range or in the end just create a higher low and break resistance. But every time the price reaches the 36 EMA or gets close to it, or sometimes even breaks it a little bit in a big trend, usually the first reaction is a bounce. Does everybody agree with that so far? I think yes, right? And that happened yesterday. And we switched to our 5-minute chart and looked for an entry there to combine this 4-hourly 1, 2, 3 and bounce on the 36 with a 5-minute entry for safer trade. I say safe because as I said, the price is out of steam. It already moved down a lot and we never know how far it will go. So we use the 5-minute entry as an intraday or scalping trade and leave the last position, the last slot open to turn a day trade in a possible swing trade. And that happened already yesterday. So if I switch to my 5-minute chart, you'll see this is our 2 to 3 line break coming from the 4-hourly chart. And what we had here was a setup exactly between the 633 and the 200. That's not easy to spot, and we call these setups, I think we voted on, I don't know, shadow setups or something like that, right? 1, 2, 3s that are not easy or sometimes a little bit funny, not easy to spot. Okay, so we had a 2 to 3 line break and the price moved lower by 1, 2 pips down here, and we said you should try it if you're into day trading and enter here and putting a stop, of course, minimum of 10 pips over 0.3. Okay, so price went down quickly and the first lot was out somewhere here, and you see what happened. And that's a really good example. If you stick to the rules and say, okay, 1 lot is out or 2 lots, depending how quick it moves, you just leave the stop where it is. You don't trail it on the 5-minute if you want to turn this day trade into a swing trade, right? The price ranged a little bit and then retraced back to the 600 and the 200 EMA. It tried to break it, but you see how powerful these EMAs are if the pressure is there, and the price failed to break and actually crashed. Okay, at that point probably target 2 somewhere here, target 2 got hit, and now you have a really free trade, because taking 20 pips and 10 pips with a stop of 10 with 2 parts or 2/3 of the trade, that creates a win-win situation. Now leaving in the last lot and managing the trade now on the higher time frame would mean, like a little bit later, the price already went down 60 pips. That's 6 times the stop for the remaining position. So it's a really good example. And there was another setup afterwards. Now, if you want to manage this trade on a 5-minute chart, on a 4-hourly chart, and you just look for a reason to take the entry there, of course you have to draw resistance lines. And at that point you don't have much resist. The only line you can draw is this one. And if you have a 1, 2, 3 here, you have to make sure you put the stop over there. Now, in this case, because this is a very big and steep 1, 2, 3, the price actually retraced and broke this area. Okay, so if you put your stop too close, which is still okay, in this case you would have got stopped out. So this shadow or early entry was a much better choice in this case. Okay, it's not always like this. This is just a very good example, because you can see with an entry close to your 2 to 3 line break coming from the 4-hourly chart, the stop is usually at a safer spot. Okay, so what else? If you check your 4-hourly chart and say, okay, I just take the 5-minute entry, but I put my stop over 0.3 on the 4-hourly chart, that means like 40 pips. In this case, it's different. You just used, with other words, the 4-hourly entry. The swing trade 4-hourly entry with the close of this candle, or if you miss this close, the red candle, then the 5-minute setup after that, as a reason to trade, and then putting the stop over 0.3. In this case, everything is okay. You're still in. One lot should be out at least. Okay, that's it. So again, we turned this little tiny intraday trade or scalping trade into a swing trade. Now the targets, as I said, even if the price comes back, if the 36 is holding, you're still safe. If not, and the price retraces too quick, okay, then it's over. But in case you see new 1, 2, 3 setups here, maybe a lower point in the end, this could leave you in for days before you get this bigger retracement. Okay, on the 1-hourly chart, and you manage it always, of course, according to the rules. On the 1-hourly chart, you have your 36 EMA here. If you don't like the way the 4-hourly chart behaves, you can still manage the last or remaining position on the 1-hourly chart to make sure you make some profits, even if the 36 EMA breaks there. But that's really up to you. I always prefer management on the higher time frames, even if that means that I sometimes get stopped out with a combination of, with a 5-minute and the 4-hourly combination, like turning the day trade into a swing trade. Okay, so well done for everybody who took this trade, and I think some of you send over charts trying the next setup and on other pairs. So great, and all the charts are nice. I also have 2 examples you sent over. The USD CHF taken by was that Edward? I'm not sure, sorry. This chart is Edward here. Can you recognize this chart? Who sent it? Edward, okay. So you took this 1, 2, 3, but you used this trend line to place your stop. Is that correct? So the trend line actually coming from your 1-hourly or 4-hourly chart, right? So price near resistance on the 36 EMA 4-hourly chart, price broke the 36 on the 1-hourly chart, entry on the 5-minute 2 to 3 line break, 20 pips, stop loss over the 200 EMA and the 633 on the 5-minute. Okay, so 2 lots out, and that makes it a free trade. Well done. What do you say, Nicholas? Comments. Okay, watch this pair for a setup during the live session. A member took an entry on this pair, like 10 pips ahead of my entry on the 5-minute. Okay, great. So this actually is a good trading journal, right? Taking a screenshot of your trade, put your comments in, saying what actually happened so you remember the next time you do something like that. And then we have another example on GBP US dollar. I'm not sure. I think that was sent by Kathy. Is that correct? Kathy, do you all see this chart? Okay, so it says took this aggressive 5-minute 1, 2, 3 setup on the 36 up to the 36. Price moved fast on the second candle, but the first green candle past the first green candle, so entry was a few pips higher. It was a 25 pip risk. The setup was first on the 4-hourly, so went to what is it? LT, a longer time frame probably, right? For better entry. 1.63 next resistance, entry was 1.6208, so 92 pips away. First and second lot out should be okay. Okay, here you can see the entry, the 1, 2, 3, and the 3 entries taken here, plus the spread, of course. So okay, great, well done. Is it how does it look right now? Did you check it? The one lot out. Okay, great. So well done. That's the way to do it. You just take screenshots according to the rules, draw your lines, write your comments in so you can remember. If you, after a month, if you gathered a lot of charts, you can actually filter out what works nicely for you and what not. You just remember that you always follow the system rules and your own trading plan. Okay, don't walk away from your own trading plan. Great so far. So to answer the question, if you have this problem, as I said before, it's a really good question. Yeah, how can I not miss a trade, or what to do in order to not miss any trades? You just don't think like this, okay? There's no way you can take every setup that appears on the chart and on all the pairs. Yeah, you have to sleep, you have to rest, you have also to live your life. But what you have to do is you have to create your trading plan. And that means, first of all, you have to figure out what kind of trader you want to be. Do you have a lot of time and do you like a lot of action? So do you really want to trade, let's say 4, 5, 6 or 8 hours a day? Okay, which means looking for setups on lower time frames, bounce trades, intraday trades, combinations of swing trades and day trades, everything. Okay, then of course you have to set the times and say, okay, let's, for example, assume you want to trade the London session. Then you have to say, okay, I'll watch the charts from 8 in the morning, yeah, let's say London time, up to 12, because usually between the first 4 hours you have a little bit of volatility there. Okay, and if you get your setups, great, you take your trades, you manage them according to the rules. And after 12 o'clock, even if there are more setups in making, you just close everything, say thank you, and that's it. Okay, and if your plan says, I watch again after US session for another 2-3 hours, you just come back after 4 hours and watch the charts again, according to your journal or according to your plan. You also create your journal. That means you take screenshots of your trades, put comments on the chart, remember what you did, and after a couple of months you will see the results. And you can say, okay, the aggressive trading during the London Open, for instance, was a good thing. Markets are volatile, I make a lot of profits, I continue doing this. Maybe on the US session, it's just an example, your trades didn't work out that well, so you just check the charts again, do the top-down approach, and if you see, okay, you have done everything according to the rules, the market just didn't want you to make pips that day or this week or this month, then you figure out what the problem was, okay? And if you figure it out, you just stop doing this and keep what works good for you and only the hours you actually chose to trade. It's like going to work. When you work in a company, they say, okay, you have to come at 8 o'clock in the morning, you go home at 6 or at 4, whatever. You cannot just go at 10 and then leave at 2. It's the same here. It's your personal, private business, this trading. So you have to create your own trading plan, and then you have to follow your own plan. You cannot just change that every day. Yeah, because you can have, even if you think this here is the best system and it's great and everything, if you don't follow your trading plan and you actually take all the setups you get during your time frame and your plan, it could still fail. Yeah, it's not the mistake of the market or the system, it's you not following your own plan. Do you understand that? Does it make sense? It's very, very simple. Yeah, it's very simple because as I said, let's say you work for, I don't know, Coca-Cola or Adidas or I don't know what, you know. If everybody would go whatever time they would like to and leave the company, these companies wouldn't exist anymore, right? They would not be able to make any profits. I don't think for a second that with trading is different. Yeah, you can have a very, let's say, smooth or cool plan. With other words, swing traders might look only 3 or 4 times a day, every 4 hours when a 4-hourly candle appears, or even every 8 hours when there are no setups in making. That means I personally don't spend more than 1 hour a day looking for trades on average. Okay, and only if I'm in a mood of day trading or scalping, I sometimes change my plan and say, okay, for this week, I'm also looking for some intraday trades. Or during the live sessions we are doing here, if we get really good setups, I'm trying to take them, okay? But all in all, I don't do that anymore. First of all, the markets are not that powerful anymore compared to 5, 6, 7 years ago, okay? And secondly, I'm probably getting older. I don't have the patience anymore to stay and look on charts all day long, because I figured out after many years that actually I make more profits looking at good, big, powerful swing trades than sitting there all day long trying to make 15, 20 pips. Okay? And what was the other question? So how do I recognize that a particular pair is volatile? Okay, who can answer that? The question is, how do I recognize that a particular pair is volatile? Okay, some say the candles. Yeah, exactly. Yeah, there we go. The price just moves in a direction. Okay, you have a trend usually, okay, or price is bouncing in a range on support and resistance all day long. Okay, it's that simple. So if you check a chart, look at this 4-hourly chart down here. If you look at this and the 4-hourly chart, is that volatile? Forget all the lines. What happened to these lines here? Okay, No, because you have red candles, green candles. The average move here is like 40 pips on the 4-hourly chart, and a spike, and it's going down. It could be that on the lower time frame the price is moving up and down 30-40 pips all day long, very, very quickly. Then you still have volatility, okay? The markets are still moving, but they move in a range. And you can also see that with high Kinashi candles, you get really big candles when the market is volatile. And the candles are getting smaller if the markets are not moving that much. And usually that happens close to a very heavy support or resistance area. And then after that, we usually expect a retracement, and you see the markets are getting volatile again because you see new candles and they are in a short trend. They are always closing lower than the previous candles. Here you see we don't have volatility for a couple of hours, like for half a day. Then suddenly the price moves again. Yeah, so on the higher time frames, you see candles closing over the previous one for longs, and they closing lower for shorts. And then on the lower time frames, you just see it because the markets are creating 1, 2, 3s, bouncing on the 36, and they create higher highs, higher lows all the time. And if they don't do it, if the market looks a little bit like this, yeah, you have a range there, then it's not very volatile. I think it's very simple, okay? And that's why you do your top-down approach, and on your higher time frames, if you see big candles, look at that, yeah, big red candles retracing to the 36, big green candles moving up, so you have your big 1, 2, 3 setups there, and you always get higher points. You always see higher points on the chart. Of course, this is telling you that this pair is volatile. Okay? Do you all agree with that, or do you have any other points that you want to add to this? Any ideas? Okay, great. So I think we are good so far, right? Sorry, yeah, you're right. In terms of the EMAs, the 12 EMAs, the volatility guide, right? So if you see the 12 EMAs moving higher as well and below the price on an uptrend, you can see the price volatile, and the same thing on the downside. So you get your crossovers, and if the EMAs move lower and they're not really like moving in a sideways formation, something a little bit funny looking, and then of course you can see also the volatility, but actually the price alone is showing you volatility, right? If you see the candles getting bigger and always closing higher, that is telling you that the price is actually moving. So you see up here we had major resistance on the CAD yen and then a big spike. Okay, so the price tried to break resistance, but it couldn't actually stay above, and then we kind of got a range in this area as we had before, and there was a small trend line break on the next on the lower time frame, like the 4-hourly chart. So you had the big bounce on major resistance, topping formations there, and then 1, 2, 3, 4 candles. The price broke this area, the first lower high, and then you got actually your 1, 2, 3. And according to the rules, an entry on the red candle with a stop, always according to the rules. And Michael took out 2 lots, quite powerful here, and now 1 lot is still running. We have a really good resistance line, right? We have 1, 2, 3, 4, probably 5 touches soon. We also have the 633 acting as resistance in combination with this line in the 36. So if the price bounces again up here, what could we do? Any ideas? Yeah, we could look for a new entry using the 5-minute chart. Why the 5-minute? Because the price looks like it's out of steam a little bit, correct? And if you check out the daily chart, this is major support, right? You have many touches here in combination with the 200 EMA. So the target would be another 140 to 150 pips for the remaining position. And that is a really great target. So let's hope Michael has the strength to stay in. And also let's hope that you look for a new entry if you get this kind of setups, using this 4-hourly chart as a filter and then using the lower time frames and the combinations to enter your shots.